Okay, so let's talk about how you're playing it. Let's start, first of all, I know one of your favorite trades for the more sophisticated kind of futures users is you love the call oil spreads. And if anything, you're just adding to those for, when we talk about it, you seem to be getting higher and higher strikes and getting more and more excited about it. Why don't you tell us about that?
So, yeah, look, I've been pretty clear on this. I think that part of the reason that oil goes up is because it's a really shitty time to be an oil producer. And it sounds counterintuitive, but you're an oil producer today, okay? You don't know what pipeline you're going to use. You don't know if your permits are going to be renewed, if they're going to be canceled, if you can get new permits. You can't really hedge because, look, go out 2-3 years. I mean, oil's in the 50s. That's below your cost of production. So you can't hedge, which means you're not going to, increase production. You're going to have carbon credits, and imagine oil's at 200. You're going to have excess profits taxes, and it's just going to be a very difficult place to maneuver around. And that's really where I don't want to be. I mean, part of the reason oil is going to go crazy is because these guys all get screwed. I just want to be in the physical. I think you're going to have a lot of inflation. I think your break evens on full cycle economics or half cycle are going much higher because what we haven't seen a lot of people talk about yet is that the supply chain's a total mess, and that all your suppliers are raising prices for the first time in like a decade. And so I just want to be in the thing that's going to break to the upside. I'm playing this with 2025 futures. I'm playing this with futures options. I'm playing this with call spreads. I've got a motley basket of strikes and various call spreads, and I probably should have funded it by writing some puts also, but whatever.
That is the true Texas hedge. I'm long oil, and I'm going to fund it by writing some puts.
Yeah, just sell some 50s to buy the hundreds.
That's right.
Oh my God.
But no, I mean, my favorite trade still is the 2023. I've talked about it a few times in your show now. The 23 December, the 90 by 100 call spread. You're long the 90s, you're short the hundreds. I'm doing this 1-to-1 ratio. I put it on at 65 cents. I put it on in huge size. It's a $1.10 bid right now, so I'm doing quite well on it. But I think it pays out at $10, and that's a 15 bagger. And I don't think any of these little shitty juniors are a 15 bagger from here. So you're basically taking a lot less risk. You don't have geology risk and permits. I got rid of all the dumb risks of all this thing. Maybe I have counterparty risk, but
you got no counterparty risk. That's that trades on an exchange. That's listen. If the CME is not honoring their trades, we have a lot bigger problems than the price of oil.
Sure, yeah, no, I know, but I mean, look, Robinhood almost failed. We learned that this week.
Yeah, but that's not a clearinghouse. You're fine. I'm gonna go out on the limb here and say you're okay with that. Okay, so are there any names that you actually do like in terms of the energy companies that you're be willing to talk about?
No, I mean, I don't actually own any producers. I got a little bit of my Sandridge left, but look. A year ago, I went on your show every month and said, this is free money. There's absolutely no way you can lose money. And it's really a question of if you'll make 5 or 10 times your money. And it turned out I made 10 times my money. And, I think it's got some legs still, but, I don't know. It's not very exciting. I wouldn't say at $13 you want to be laying into this.
Right.
I guess the thing I would talk about is I own a lot of Valaris. They're the largest offshore drilling company. I think offshore is going to come back. I think that if you look around what's happening in North America and you realize how difficult it's going to be to operate, you look at what's happening in a bunch of other places, producers are going to go to places without like laws or regulations or places that don't care about the environment. They're going to go to West Africa, and they're going to go to Guyana, and they're going to go to Brazil, and they're going to go to places that really just need the US dollar revenue because they have nothing else. And you're not going to do that onshore. You're going to do that offshore. And I think the company trades at like 15 cents on the dollar of replacement cost. And at the top of the cycle, it used to trade at 2 times replacement cost. And It's cash flow positive. It has a clean balance sheet. I don't think you really get hurt. And I think it's a good chance you make a lot of money. It's kind of the same setup with Sandridge. I don't know how much money you're going to make, but I don't think I'm going to get hurt too bad. I mean, admittedly, my cost basis is 21. And we talked about this a couple months ago, and it's 35 today. But that's how I'm playing it. It's so
that was something that went through bankruptcy, cleaned up all the bad debt. And the reason it's trading so cheap is because everyone thought there's going to be no need to drill or do anything more like that in the future because we're all going to be green in a couple of years.
Pretty much. And then remember, a lot of the guys who got equitized, okay, this is a long bankruptcy. They had the debt. A lot of them in the 2-3 years that this has been going on, they discovered ESG, and suddenly, their risk officer is like, we own what? We own offshore drilling companies? Like, really? Like, just fire sell. Just sell it to Kuppy the first day, No, that's how I ended up picking up a whole lot of it, really, really cheap. But yeah, that's how I'm playing it. But mostly through my oils and my oil futures. I think that's the play the way to play it.
Okay, so just to recap, you're actually reducing some of your equity or energy equity exposure, and yet you're being even more bullish on the actual underlying commodity.
Right. I mean, I have some other, service companies and I have bits and pieces. It's a big basket of this crap, but that's, I guess, that's how I'm playing it. I mean, just going back to the macro side of it. I'm the Project Zimbabwe guy, and I think we just, go higher. Lots and lots higher. I also think a really nasty shakeout's coming along the way, and if you look at, say, a broad index like the S&P, it might just do fine and power through just because, the energy component goes from, what is it, like 2%? It just goes to 20%.
Okay, so let's 1 second. Can I just jump in here to make sure that everyone understands? Yeah. You think energy is going higher, but you think that the stock market as a whole is due for a correction?
I think it's due for a nasty one. Look, for the last 18 months, J-Pow had your back. He's now effectively a headwind. Congress had your back. I think stimmies are frozen. Fund flows had your back. I don't think they have your back anymore because the dollar is strong. I just think that a lot of things are kind of start going against you in a bit. And look, I think oil rocket ships, and I think that probably shreds a lot of the other sectors. And, I think that we've had a clean shot where basically anything with a QSIP went up. And now I think you have to be more selective. And I think, Kevin, you really nailed this when you said it was a cycle. What's your phrase?
It's rolling bubbles. Rolling bubbles. That's correct. Yeah.
I think this is rolling bubbles, and we're going to roll out of Ponzi and into energy and hard assets here. Whereas before, you could be long everything.
Yeah. Kuppy, so just circling back to that, so generally you haven't been long energy stocks, but making this call that the weighting of energy stocks inside the S&P is going to increase would entail energy stocks rising. You think that that's just going to be more that the relative value of the other stocks in the index are going to go down, or do you see upside on these energy stocks?
Well, I see upside of the energy stocks, of course, but I mean, I put on a call spread that pays off 15 times. I just think that's a better trade than buying some integrated producer and hoping for a 15 bagger. That's kind of crazy.
Right.
But then, I think a lot of the other sectors in the S&P, higher interest rates and a lot of inflation, which will crimp margins. I think these guys are in for a world of pain. And, the energy stocks will obviously go up. And I think a lot of the other stuff will go down, and maybe the overall market goes down as well, just because the energy sector is so small right now. But over time, just like tech went from being small to very big, I think tech will cycle out and energy will become the biggest component. It'll just, basically replace where it was in 08, I guess, the start of 08.
There you go. Now that's a call.